Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, July 22nd. This week we're seeing a lot of choppy action again. I thought we'd see some trends emerge this week, but so far we've seen more of the chop that we've seen for the last couple of weeks. Let's go right to the gold chart first. Gold tested support earlier this week down at the 1180 area, which I warned about last week. So far it's holding. It's very, very important that gold hold this general area here defined by 1170 to 1180. It looks like it will. I definitely want it to hold this area here. If it fails at this level in the next couple of days, we could see a move down to about 1100 in gold. I do not expect that at this time. Instead, I expect a rally back to 1220, possibly pushing up to 1240, and then we'll have to see if the correction that started at the June record high is going to continue for a little bit longer, or we're going to move immediately to record new highs. I suspect, because this is a summer trading and there is some seasonal weakness during the summer for gold, that we're going to move back up to the 1240 level, then back down to 1200, 1180, and chop in this area up and down until we get past Labor Day. Unfortunately, nobody likes a choppy trading range, but I have to call it like I see it. It is possible we'll have nothing more than a choppy trading range for the next 4 to 6 weeks. So stay tuned to my forecasts there on gold, to this video, and to my columns. Next, let's take a look at the dollar index. I'll pull that chart up for you here. The dollar is still in a downtrend from its peak back in early June. The euro has been strengthening against the dollar, as has most other currencies. And I do expect that, like gold, we'll see a pretty choppy range between 81 and 85 on the dollar index over the next 4 weeks. Bear in mind, the long-term downtrend in the dollar remains fully in force, and so far I do believe that this June peak in the dollar index might have been a very significant high for the dollar, and over the next 2 years we could begin to see the final demise of the dollar. A little too early to say. We could get another rally out of the dollar in the interim. However, I have no doubt whatsoever in my mind that the long-term bear market in the dollar remains intact. Let's go on to the Dow. This is the Dow is doing almost exactly what I forecast over the last several weeks. We came down to that 9670 support level, held it, came back up to 10.4, came back down to 10,000. Now the market's trying to rally again. We'll probably get up to 10.4, 10.5 or so, and then turn back down once again. But the bias is to the downside. After another initial rally attempt here, we might even get back up to almost 11,000 because, again, like gold, it's the summer and we have a light volume situation in the stock market right now. I do believe all signals, all of my indicators still point to a minimum on the downside of 9,000 in the Dow and probably 8,700 by, let's say, late September roughly. However, that could unfold much more quickly than anyone expects. We could get a rally back up to 10.5, and then the market could fall apart very, very quickly. So as choppy as these markets are here, we need to exercise patience. I have no changes in any of my interim or long-term core positions in any of the markets that I've recommended. However, as choppy as these markets are right now, the tendency is to, just sit on the sidelines and wait for something to happen here. But and that's okay for you all. Basically, I'm just saying that I am watching them very closely, because as choppy as these markets are, they do give very subtle clues when they're choppy like this. And I will be watching them very closely, as frustrating as they can be on the short term, to give you a heads up on when the choppiness will give way to a trending move that we can capitalize on. Till next week, have a good weekend. This is Larry.